All right, welcome to AI Explains ICT. Today, we're jumping right into the deep end with core content, month 7, episode 5. You're definitely going to want to grab a pen and paper for this one because we're talking about how to find those really high probability setups, especially when the market feels like it's just stuck. Ready? Let's get into it.
So, you know that feeling, right? When you're trading and the market is just choppy. It's not really going up, it's not really going down, and you just keep getting stopped out. It is so frustrating. But what if I told you there's a method to see the hidden order inside all that chaos? Well, according to ICT, there absolutely is. It's all about learning to see the structure that the big algorithms are actually paying attention to.
Okay, so the whole framework, everything we're about to build here, it really just boils down to two core ideas. Every single setup, and I mean every setup, especially for short-term trading, is all about how these two concepts work together, and those are time and price. And here you can see those two pillars perfectly laid out. First, you've got time. Think of this as our context, our frame of reference. We're looking back over a specific period, usually 20, 40, or even 60 trading days. Then you have price. This is where we get our specific actionable levels. We're talking about the PD array matrix, things like order blocks, fair value gaps, all those key points. The real magic happens when you blend the time context with these specific price levels. Now, this is super important, so I really want you to lock this in. The stuff we're covering in this video, it's tailor-made for those markets that are just consolidating, stuck in a range. They're not rocketing up or tanking down, and let's be honest, that's where a lot of traders get into trouble. But this is exactly where this ICT method can give you a serious, serious edge.
All right, so where do we even start with all this? The very first thing we need to do is define our playing field. We have to cut through all the noise on the chart and figure out the actual boundaries of the current consolidation. And we're going to do that right on the daily chart.
And here's the first step in action. It looks simple, but the details are everything. We look back over the last 60 trading days and find the highest high and the lowest low. But, and this is the key detail, we are completely ignoring the wicks. We are only focused on the candlestick bodies. That's the open or the close. Why? Because that gives us the true institutional range we need to work with.
Okay, so we've got our range locked in. What's next? Now we need to find the middle ground, the fair value point. Just one simple line on the chart is going to instantly tell us if prices are cheap or if they're expensive. And that right there gives us our basic bias for every trade we take. And doing this is actually super easy. You just grab your Fibonacci tool, draw it from the highest candle body down to the lowest candle body of that range we just defined. And boom, that 50% level that pops up, that's our equilibrium. You can think of it as the center of gravity for our whole setup. And just like that, with that one line, our messy chart suddenly makes sense. It's organized. Everything above that 50% line, that's our premium zone. That's where we should be thinking about selling, and everything below it, that's the discount zone, and that's where we want to be looking for buys. It's so simple, right? But it is incredibly powerful. All right, you with me so far? Good, because now we're going to take it a step further. We're going to start looking at the market the way an algorithm would, by breaking it down into even smaller, more logical chunks. This is how we get a really granular, high-definition map of price. So what do? Well, we do the exact same thing we just did, but we do it inside each of those halves. We'll draw a fib on that top premium zone to find its midpoint, and then we'll do it again for the bottom discount zone. And just like that, our range isn't just two halves anymore, now it's split into 4 clear quadrants. And this is the really cool part. It's this process of repeated division. We split the whole range, then we split the halves. What this does is it gives us a fractal view of the market. It's like we're mapping how an algorithm sees overbought and oversold, but we're not using some laggy indicator. We're literally mapping the structure of price itself. And looking at it this way, it just unlocks a whole new perspective. Check this out. Even if the price is in the overall premium zone of the big range, it can still pull back into the discount part of that smaller upper quadrant. What does that mean? It means you can find amazing, high-probability long trades in an area that most other traders would just write off as being overbought. That's the kind of edge we're talking about here. Okay, so we've got our map. We've defined our quadrants. The structure is laid out. But how do we actually find a trade in all this? Well, the next step is to overlay our PD arrays right on top of this beautiful map we've just created. Think of it like this. The structure, the quadrants we just built, tells us where we should be looking for a trade. But the PD arrays, the order blocks, the breakers, the fair value gaps, they tell us the exact price level to watch. So we're just waiting for price to hit one of our key levels inside one of our key zones. This right here, this is basically your cheat sheet. It's a really simple if-then process. Is the price in a discount zone? Okay. Is it hitting a bullish PD array? If the answer is yes to both, then you've got a potential buy setup. On the flip side, is price in a premium zone? Is it hitting a bearish PD array? Then you've got a potential sell. We're always pairing the right zone with the right signal. And really, this is the whole point of the exercise. We're not trying to be fortune tellers here. We're not predicting the future. All we're doing is identifying a specific scenario where the price is very likely to move cleanly, from a discount array up to a premium array, or the other way around. We're just trying to catch the easy money, the path of least resistance. Okay, let's pull all these pieces together now. We're going to summarize the whole strategy by zeroing in on the absolute best places to look for a trade, and maybe even more importantly, the one area that you should probably stay away from. So where are the A-plus setups? They are almost always at the extremes of the entire range. The absolute best shorts are going to show up in that highest quadrant of the premium zone, and the best longs, they're going to be way down in the lowest quadrant of the discount zone. Why? Because these are the spots where the algorithm is most likely to step in and cause a major reversal. Now, on the other hand, the area you want to be really careful of is that middle ground, right around the 50% equilibrium level of the total range. ICT calls this the chop zone, and for good reason. Price here has no idea what it wants to do. It's indecisive, there's no clear direction, and this is where traders just get chewed up and spit out. Honestly, unless you have a super clear read on where price is headed, it's usually best to just sit on your hands and wait for price to get out of this messy middle area. So, let's do a quick recap of the entire process start to finish. Step 1, map the 60-day institutional range using only the candle bodies. Step 2, divide that range in half, then divide the halves again to create your premium and discount quadrants. That's your roadmap. Step 3, execute. We're looking to buy at bullish PD arrays deep in the discount zones, and we're selling at bearish PD arrays deep in the premium zones. Our target is the opposing PD arrays, and our number one rule is to avoid that messy chop zone in the middle. That's it. That's how we systematically hunt for these high probability moves. And there you have it. That's the blueprint for mapping and trading these low-resistance liquidity runs. Hey, if you got some value out of this video, do me a favor and hit that like button. And make sure you subscribe so you don't miss the next one. And seriously, if you have any questions, don't hesitate. Drop them in the comment section below, and a real person from our team will get back to you. All right, that's all for now. Safe trading, everyone.